4 things about Alphabet stock smart investors should know or probably know already right now. I've talked about Alphabet a lot more recently because I do think that there is a disconnect between what the business is actually worth to what the market is actually valuing this business at. Now, we know that compared to the Magnificent Seven, Alphabet is trading at its lowest multiple. There are various reasons for that. Some of the Magnificent Seven are just super expensive. The others are growing faster or expected to grow faster than Alphabet, and so they get a lower multiple. Currently, if you look at Alphabet, right now, the time of making this video, the stock is up 2% today, has a forward PE of 20.4 times, market cap $1.72 trillion. But if you look at what the analysts are expecting for the coming fiscal years, you can see that for sales growth of just above 10% for the coming fiscal years, a bit below that in fiscal year 2026, but EPS is expected to outgrow revenue growth in each and every year. Almost all of those close to 15% growth year over year. We also know that Alphabet is buying back a lot of shares, which means you as a shareholder know that your shares will be worth more in the future. We can see that free cash flow per share has increased quite a lot in recent years as well. So this is what step one, what investors already know today, is that Alphabet as a business, super strong business, trading at a lower multiple than the other Magnificent Seven. I'll explain throughout this video the other points and a bit of the reasoning why there is, let's say, a bit some skepticism behind the growth potential of this company. Yes, of course, it has to do with search versus chat. But before jumping into that, if you enjoy this type of videos, leave it a thumbs up, subscribe. If you have not, we really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So first up, let's talk about search, right? Search, the dominant part of Alphabet's business. Search, advertising, huge part of the Alphabet business right now, Google business now, the last decades, and probably in the future as well. Now, despite everything that you've been hearing, as you can see, this is the market share worldwide across desktop and mobile. Google, 91.62%, Bing at 3.31%. Yes, it is true that Google has been down a little bit. If you compare it to March 2023, it was at 93.21%. Now it's at 91.61%. Back then, Bing was at 2.76%. Now it's at 3.22%. Okay, not that much of a move. By the way, if we just look at mobile, it's even more dominant for Google at 95.37%. And Bing here sits at 0.51%. We also know that Google, with regards to the share of digital advertising revenue worldwide, sits at the number one spot at 39%. Number two is Facebook at 18%. These are the numbers for 2023. And if we look at the predictions for 2030 with regards to the digital advertising market, it's expected to reach just over $1 trillion by 2030, which means it is growing at a CAGR of 14.5%. And with Google being the dominant company there, you can rest assured that they are still going to take quite a lot of share moving forward. Maybe not staying at 39%, maybe it will be a bit low, which is maybe why the company right now is trading at a lower multiple than the other companies in the Magnificent Seven. Could be a reason, because right now with the rise of chatbots, right, AI chatbots, ChatGPTs, you name it, there is some that are saying that, look, people will, let's say, use Google search less and use chatbots more. Me personally, I still use Google search daily, and yes, I do use things like Gemini and ChatGPT sometimes as well. I own a Google Pixel 8, which means I also have Gemini on my phone, very, very easy to access, which, by the way, Pixel is another revenue stream and way for Google to dominate the Android market as well with regards to advertising and the platform, the software, all of that. So that's definitely something to keep an eye on, but that's not one of the 4 things that investors should know for this video. Maybe I'll do a separate one another time. But going back to the search versus chat, if we look at a graph here from Altimeter, this is from Brad Gerstner. So if you look at search queries per day, they are expecting that, well, informational searches to go trending down, continue to trend down, and for LLM-based searches to go up quite fast in the coming years. Now, why is this a bad thing for a company like Google? Well, we just have to look at this slide right here. LLM queries are just less profitable right now. Right now, that is. If you look at the state of it today, cost per query and revenue per query, you can clearly see why it's so profitable. But if you move to LLM-based searches, the cost per query right now is much, much higher than the informational searches, and so revenue per query is much lower. But in my opinion, moving forward, the cost per query will just come down drastically. I would also like to know that Alphabet owns Google Search and YouTube Search, the most dominant search platforms on this planet, which is very important because if you want people to use LLM-based searches, you need to have a pretty good database. And I mean, if you own Google Search and you own YouTube Search, you got a pretty good database to start with. That's not all, right? If you want, let's say, if you want to go the next step and make sure that, yes, people are using Gemini more and more, I mean, where better to start than your own database? It's not just that. You can integrate YouTube, you can integrate Gmail, your maps, very important, advertising, navigation-wise, you name it, all of that can be inputted in an LLM that is made by Google. Of course, more recently, Gemini made the headlines because, well, some employees or a lot of employees at Google thought they could play God. Hopefully that will change, but that's something we're going to talk about in just a second. But let's not forget how big Google is. Let's not forget of all the data that Google has under its name, Google and YouTube. And by the way, for those that are thinking that search did not evolve already in the last couple of years, I've shown you already what happens when you search for, let's say, Alphabet stock a buy. First of all, you don't directly get the 10 blue links. No, right now you already get part of an answer taken from a website. Then you also get other questions here. People also ask this, and that. Then you've got top stories. And then you even got videos in the search, which, by the way, I am the video number 1 here, so congrats to myself. So to say that search and the 10 blue links have not changed over time is just a pure lie. Because right now, a lot of bears are saying, look, when they're going to change from the 10 blue links, it's going to hurt their business quite significantly. But the reality is they have already changed from the original 10 blue links. You got the answers when you want to right now. So it's another thing that investors need to know is that search has already changed over time. Google, Alphabet as a company has Google and YouTube, the two most dominant search platforms on the planet. Last 2 points here, that's a bit on the negative side, is that one, CEO has been underperforming despite the stock being very close to its all-time high. It could be doing much more, right? The fact that they dropped the ball with regards to the launch of an AI chatbot, right? They let ChatGPT come out beforehand. They let ChatGPT run with the name because Google has, let's say, it has the brand name. Let's say, oh, you want to search for something? Google it. Now with LLMs, OpenAI has taken that spot, right? Oh, you use a chatbot, it's probably number 1 name that comes up is ChatGPT. Drop the ball on that. Plus, when they released their own version, it always had bad publicity. Failed launch, fake launch, now Gemini making up history as it goes. So that's an issue. Issue is a cultural issue as well. This is one of the points that you should know as an investor is that if things do not change internally quite quickly, quite drastically, just like we've seen with Meta, right? They changed it all quite fast, and so the business reflected those results quite fast as well, which is why it's up close to 5x since the lows of 2022. That's something to note. Of course, with efficiency as well, profitability goes up. And then last point is the long-term bets. I mean, there is the cloud business, which for some reason is always forgotten because it is not as big or as profitable as Azure or AWS right now. But this is definitely a business that you should keep an eye on because it is growing quite fast. Another part of the long-term bets, let's say, is, let's call it Waymo, right? Waymo, if it works out right now. Last time it was valued was $30 billion, which is much lower than the number it got in 2018 of $175 billion. But again, if you think that the future of transportation is going to be autonomous, Waymo is probably going to be one of the winners. I still think Tesla is doing the right thing. There is Mobileye, there's Waymo, there is Cruise. There's going to be a potential lots of winners in that market. Of course, this is not a cheap operation to run. This is not run as efficiently as it should. Going back to the culture, the efficiency problem, it all comes back to that. But this is definitely something that probably gets zero value right now when buying a company like Alphabet, a stock like Google. And so in my opinion, the longer the disconnect exists, the better it should be for long-term investors, because you're getting here the best company when it comes to advertising, search. Potential here is immense with YouTube as well, right? The expansion of YouTube, the expansion of connected TVs, programming, you name it, more offline advertising coming offline. This is something that this company will definitely benefit from. There are still some risks, like I said, leadership and cultural issues, efficiency at the company. Those are all the things you have to take into consideration. And then there is also cloud and Waymo, things that could definitely improve this company in the future. I think that the fears of search dying and chatbots search taking over are overblown. It's just my opinion, of course. Do share yours down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not. Let's see you all in the next one. Bye-bye.